Good afternoon, everyone. This is Andy O'Fee, the Yankee Closer. Today is Monday, July the 24th, and boy, we've got a wealth of information coming out this week as far as economic data goes. We have a Fed meeting. We've already had some housing data this morning. We have GDP. We have earnings reports coming out. Again, FHFA also home price appreciation reports, a Case-Shiller report as far as home prices go too. So we've got a very, very crazy week ahead. So we got to keep our eyes and ears open as far as the data that does come out. Today we did see a couple of things as far as the housing market goes. The first thing that came out was existing home sales. It was a slight miss. It came in at 5.52 million, but that's just a simple reflection of just the actual overall supply-demand dynamic right now, as there are, again, fewer homes for sale on the market. However, the demand for homes is still strong nationwide. It's still up 0.7% year over year, which is really a huge number to look at when it comes to the health of the housing market. We also had something called the median home price number, and that is not an appreciation report. It's not going to tell you how homes have appreciated. We'll get those numbers later in the week, but it does show you pockets of homes and the number that's sold within that period of time, the percentage of that time. So homes under 200,000, they were down significantly, and the home prices that were anywhere between 250 to 500, 500 to 750, and 750 and above to the million range were all up significantly. So this number really is skewed when you look at it. It is at an all-time high, around $262,000 as far as the median price goes. But hey, let's dig down deeper into the numbers. So if you think about it, people that are buying homes now are really are suffering as far as looking at that lower priced home because there's no supply. So now the homes that are priced higher, if they do want to go out and buy that higher priced home, they're going to venture into that next pocket as long as they can afford it. And I think that's what's starting to drive people out of that lower price point into the higher price point as far as they can afford it goes. So that's also a very, very good indication as to what's going on. I also think locally, we're starting to see some of these really bigger homes that were priced significantly higher in the past after the housing boom that we went through. Now we're starting to come down significantly. So those homes were dramatically overpriced. They came down a little bit, and now I think they're starting to come into a point where you're starting to get buyers more attracted when they're looking at that bigger home north of 500,000 locally. So some things to look at, very, very important. The market right now is really fighting technical numbers. I'm going to send a chart to show you where we are on the 10-year note yield, as well as prices on mortgage-backed securities. Again, I think the market has a little bit of room to run here to the upside as far as rates coming down. So right now the market's kind of trading a little bit sideways. This week we have earnings reports on stocks, which I think could have a huge impact as far as yields go on the Treasury note. So we're going to keep our eyes on that also. I'm going to also attach the economic calendar this week so you know what's going on, and I'll update you as we go along. Andy O'Fee, the Yankee Closer, Monday, July the 24th. Get ready for a wealth of information this week, and we're going to keep our eyes and ears on it for you. Thanks so much. Have a great afternoon.